Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Well, hi there and welcome to the ISE FX Options Weekly Outlook for October 26th to November 1st. I'm your host, Jason Ayres, founder and president of OptionSource.net, and as always, we're going to start with a look at our weekly U.S. dollar index. We saw prices playing within our 80 to 82 focal zone last week and suggested that a break out of that would likely play into that 85 to 86 area identified here on the chart. We did see the index move into higher highs as the U.S. dollar continues to gain strength against most major currencies. Moving down into our MACD, we see a strong trend to the upside. Our RSI is also supporting a continued momentum in that direction. Now, that being said, as mentioned last week with a look at our big picture U.S. dollar index, the 90 to 95 zone right now remains a very, very realistic target to the upside. Now, should we see prices consolidate into this 85 to 86 zone, which does represent a key resistance level over the bigger picture, we could conceivably see a pullback and a consolidation in that 80 to 82 area again. Now, that doesn't mean that this index or the U.S. dollar is not going to continue to the upside. It may simply just mean that it's time to take a little bit of a breather. Now, before we move forward with this week's FX Options Outlook, it is important to note that there is a scheduled FOMC meeting for Monday morning at 10 a.m. Keep in mind that Mr. Bernanke's testimony can have a significant impact on the direction of the U.S. dollar. So with that in mind, let's take a look at our first ISE FX Options pair value, CDD, the U.S. versus the Canadian dollar. We last saw the CDD trading within the 119 to 121 focal zone and suggested that a break outside of that would likely see us play up into that higher level in there at the 124, 125 zone. Now, we did see a little bit of a consolidation there, but Friday we broke above that. Our MACD still continues to trend very strongly to the upside. Our RSI, although still shows some momentum, suggests that we are in the overbought territory. Now, should prices continue, very easily the 130 to 133 zone is obtainable. Now, should prices reject out of this 124 to 125 area, it would be logical to see prices pull back in and find support at the 119 to 121 focal zone identified here. Well, let's take a look at the YUK, the US versus the Japanese yen. We had identified that sideways triangle forming and suggested that we really wanted to pay attention with respects to how the price actually broke either above or below. We were expecting a very significant move in either direction depending on where prices did break out. As you can see here very clearly, with a break below that sideways triangle, we played right down into the 93.5 to 94 focal zone here. Now, although our MACD is suggesting a continuation to the downside and our RSI is also suggesting a continued momentum, the 93 to 94 focal zone represents a very significant support level on the bigger picture. And so since we've traded back up and into that zone, we could conceivably see a little bit of a retracement back in before any sort of a continuation can be expected. Now, with that in mind, our next logical target, should prices break below that focal zone, is right down here into the 88 to 89 zone identified on our price chart here. Although the US dollar continues to lose strength against the yen, not so with the euro, as seen here in our ISE FX option pair value EUI. We were looking at a break above that 75 to 76 focal zone, playing into that 77 to 78, which is indeed what has taken place. Now, that area there remains a very significant resistance level, so any sort of a rejection within that zone will likely play back in to test that support level at the 75 to 76. Our MACD continues to trend very strongly to the upside. Our RSI looks like it still has a little bit of room to go as well with respect to momentum. So should prices remain above that 77 to 78 zone, a push higher will see us play into that 80.5 to 82 as a next logical area of resistance. Last week we saw the BPX, the US versus the British pound, playing between two key focal zones here illustrated on our price chart. We suggested that a push up in towards that 58.5 to 59 focal zone might meet with some resistance. However, a continuation through that would likely play from there into that 61 zone identified on our chart. We clearly broke well through that. However, a play into higher highs actually on Friday met with some rejection as we pulled off and closed on the lows of that day. Now, our MACD still suggests a strong positive trend to the upside for the US dollar against the pound. Our RSI looks like it has continued strength or momentum to the upside. So with that in mind, we would still look at that 66 focal zone here as being a key level of resistance. So while prices broke off of that, we may see a test down into that 61, but any sort of consolidation or bounce is likely to again meet with some resistance up at that 66 level. And finally, folks, let's take a look at the AUX, the US versus the Australian dollar. We'd identified a sideways triangle pattern forming and suggested that we wanted to see a definitive breakout either to the upside or the downside to really take a directional bias. We suggested that if it did push above that 150 to 152 area, that prices would likely find some resistance in at the 160 to 165 zone. Now, that being said, the MACD now seems to be crossing up after a little period of indecision, suggesting a commitment to a continuation in that upside direction. Our RSI is actually building some momentum and seems to have a little bit more room to go, also suggesting that. However, we did close on the lows as of Friday, and should prices actually reject in this area, a logical retracement would be back down into the 152 zone. Should we break out of that 160 to 165, then we would be targeting the 170 to 180 area as the next price range to be looking at for any sort of continuation to the upside. This has been your ISE FX Options Weekly Outlook for October 26th to November 1st. I'm Jason Ayres, founder and president of OptionsSource.net. Thanks for joining me here this week, and we'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX Options trade alerts, just visit www.optionsource.net. To learn more about ISE FX Options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX Options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.